Thank you for joining us. Today we're going to talk about, as a business owner, what do you do when some of the typical tax planning tools that we might use aren't available, especially when it's a high taxable year. So join us as we explore some of these topics and these extra tools that you might be able to use. So in a high profit year, there are a lot of solutions that we can use as tax planners and as business owners to reduce our tax burden. But what happens if these solutions aren't available for one reason or another? What do you do when the traditional options aren't available? So it might seem like 2021 is a lower profit year for some, and for some it really was. But what we're seeing for many businesses this year is it's been an extremely highly profitable year. Some of it is some of the incentives that are coming through. Maybe it was the employee retention credit that's there that is taxable for us. The payments for the SBA, that's taxable for us. It could also just be the demand that we're seeing in many of these businesses. But as we're looking and talking to business owners, we're finding that it is a high profit year. And so we need to be really thinking about what are some of the things that we should be doing. But what we're running into and what business owners are running into is some of the typical tools that we use aren't available. So the most common one is let's go buy a vehicle or let's buy some equipment. And that still certainly makes sense to do. And if we evaluate and we can look those, we can do it. But what we're finding, because of the supply chain disruptions that we have that are there, you may order something today and it may not come until next year or even after that. And so if you are going to be utilizing the typical go buy a vehicle or typical buy some equipment, make sure you're thinking about that now in order to get it in place before year end. And one thing I do want to mention, and I say this on a regular basis, don't just buy a piece of equipment or a vehicle for the sake of buying it. Sure, you get a tax deduction, but it means you actually spent the dollars out too. So a dollar out just gets you a tax deduction. So don't buy something just for the sake of buying either. So please keep that in mind. But what happens if you've tried that and you have a specialized piece of equipment and they tell you, call them up right now and they say, yeah, nope, that's probably 6 months out. There's no way we're going to get that in time. What are some of the other things that we can do that are available? One of them is retirement contributions. And when I say retirement contributions, I mean through the business. So it's a business deduction. Now that's nothing new. Most of our businesses that we work with have simple IRA plans in place and they utilize those. See the video that we talked about last week on that. And don't hear me say that we don't like simples. In fact, I absolutely love simple IRAs. But have you considered a traditional 401k or with a profit sharing plan? Or let's even spend a little time talking about a defined benefit plan. That's the age-old pension. I know it seems very antiquated, and in the world that you hear businesses going away from pensions, but that is a strategy. So you'll see a graphic right here that we're kind of showing you and I'm not going to focus on the exact numbers here because there's lots of nuances within it, but what you'll see is there's tools here. None of them are wrong, but as we go from a traditional IRA into a simple IRA, into a SEP plan, which is a profit sharing plan, into a 401k, and then into a defined benefit plan, they all have their unique opportunities. And generally speaking, as we go down the plans, if you will, they become more complicated. There's more risks involved. There's more complexity, and therefore there's more cost. But there's also more ability to take deductions. So what I want to use this opportunity here is to say that we should be thinking about some of those. If you're looking at a highly profitable year, and in particular, you might be looking at one this year and maybe next year, maybe the following year, these might be something that we want to look at. So we might want to look at a traditional 401k, maybe with even a profit sharing plan inside of it, or a defined benefit plan. And again, that defined benefit plan, that's what you hear of when you hear a pension. There's a reason that you hear pensions have kind of gone away and lost their appeal because they are fairly complicated. So they're not for everybody. but they do offer some extremely powerful tools for tax savings, especially in these high taxable years. So we don't want to just, push those off as not even an option because of the complexity. They are an option. They may not make sense for everybody, and in fact, they're probably not going to make sense for many businesses, but they may make sense for yours. And so as we're looking at it, I want us to think through that may be an option in this particular year. I really like these options, so this 401k with a profit sharing plan or a defined benefit plan, as we make the shift to another thing that we're noticing, and that is as business owners near retirement, the desire to purchase equipment just for the sake of purchasing equipment goes down, right? So maybe you're looking and you're starting to say in 5 years I'm going to retire, or in 2 years I'm going to retire. Whereas before, when you were in the early stage of your career and you were starting to invest, or you're willing to invest more dollars to see that return that you'd put in, well, if you're going to retire in 5 years or 2 years, you may not put that investment in. And so there you also become more taxable than you typically or have been in the past. So these 401k plans or these defined benefit plans really make sense in those particular cases. So one other tool that is out there that, like the pension plans, tend to not be one that we jump to right away, but that's taking a look at the structure that you actually have within your corporate or within your entity. So many businesses are partnerships or pass-through S corporations. Perhaps becoming a C corporation makes sense. Or perhaps maybe if you're a C corporation, becoming an S corporation. So taking a look at the actual entity structure and the tax type of your structure is something else that you really should be looking at. One of the strategies, and I use that word loosely on it, is one of the maybe acknowledgments of planning for a high profitable year is just planning that we might have some taxes that we're going to pay, more than we typically do. Maybe you don't want to go buy this equipment, or maybe you don't want to put in these defined benefit plans or these other things. Just recognizing that, right now we're in a fairly low tax regime compared to what we could be in the future. So just by default, by accepting it as income here, that might be a conscious decision that we want to do as part of tax planning. Again, don't default into that decision, but that is a tool that we can utilize when we're comparing, because maybe we're in the 37% tax bracket this year, and next year you're at the 39.6, potentially. By paying taxes today, you just saved 2.6%. So that in and of itself is a tax planning tool. Again, I don't want us to default into that position, and as a tax accountant, it always hurts me when I say that we're considering paying taxes, but that is there, and I want you to hear that is one of the tools that we have right now as well. None of these strategies that I've talked about, profit sharing plan, defined benefit plan, entity structuring, or some of the other tools that I haven't even talked about, none of them are quick discussions. None of them are you're going to think about it today and put it in place tomorrow. And so they do require us to think, to plan, and to really analyze whether it makes sense. So whether or not you're looking at this particular year as a high taxable year for you, whether it's because of just the circumstances that you're seeing this year, or whether it's because you're looking towards retirement and maybe spending some of these typical just go buy some equipment isn't making sense, there are other strategies that are there. I just gave one example, which is the retirement plan, the more advanced retirement contributions. There are many other ones that we should be talking about. They're not highlighted here in this video. Come talk to us, let us know. You're not alone this year. That's one thing I also want to communicate to you, is that there are highly profitable businesses. You need to be thinking about it now. You need to be thinking early. So talk to us, give us a call. We definitely want to walk through some of the different options that you have. Thank you for joining us, and we look forward to talking to you again soon.